Raggy, how we doing today?
I'm doing well. How are you doing, Mitch? How you doing, Dennis?
Hi,
Hey,
Rocky.
excited about new opportunities.
Mm,
That's the way I'm going to address this because, of course, we've got a now a pullback. We've been talking about it more being a correction here. Is
mm.
that how you see the market?
I look back 5 to 10 years. So when every new month starts, these are old habits from my commodity futures trading days. You got to know what corn would do, planting,
Hmm.
harvesting, all that stuff. And while I don't necessarily think S&P and dollar and so forth are super sensitive to these seasonals, if you look at August, I mean, we should take a Dramamine at the end or 10 at the end of July because August nature is just one that up and down, and it finds a range and it chops up like a Ginsu knife. So overall, I'm a little bit bullish still because we saw that CPI data keep expectations for the Fed not to hike, at least in September. So I'm a little
Mhm.
bit bullish, but it's going to be a rough ride.
Yeah, it's just not going to be as easy as maybe the first half was. But I still stay in the camp like I'm not full bearish here. I think we just need a correction. And I've still got a shopping list going. And I think as you get down and some of these stocks come down to more reasonable valuations here, I think you strike. I think you have your shopping list. But I don't think it's going to be like the first half where we're up, 30% on the NASDAQ and we're just tack on another 30% in the second half. I mean, stocks just don't go straight up normally.
They don't unless, Powell's S&P target's public, until he's telling us what that is. But I have a hard time, so I think correction's a great word, right? So
Yeah.
mean reversion, correction. To me, where is the previous floor? Where are volume levels sitting? Where folks have already put their bets in? I don't know that we see anything cataclysmic. I'm not that bearish. Am I looking for something down at the 200 exponential like we did, say, September, October of last year, or even March of this? I'm not looking for anything that quite panic filled. But to your point, shopping. I would love to go shopping.
What is on your shopping list here? Do you have some stocks on your shopping list that you're
Boring
looking at?
things. Yeah, boring things. So my
What do you
shopping
got? What do you
list,
got?
I mean, it's super boring. It's definitely usually a weekly time frame or a
Hmm.
daily. And it's when can I buy the SPY? When can I buy the DIA? Where can I jump into healthcare, Staples, Coke, Walmart? It's really, really boring. I'm not looking for the next up and comer. I'm looking for things. I remember telling guys we're talking about 2000. I remember telling my Mom, I'm going to put this in your portfolio. She let me start managing money very early because she saw I had a knack for it. So mind you, your kid's telling you there's this book company. We're talking about 2000. Let's start scooping that up. Let's start buying things like that. And so I look at her portfolio and I think if you take that willingness to wait 6 months, sometimes a year, for those moves, shopping, as you're saying. And when everyone else is panicking, you're picking up things in Q1 of 2019, Q1 of 2020, because your time horizon is not measured in hours or days or weeks, but rather years. My
Mm,
mom's cost basis in some of these things are ridiculous because
mm.
that's the process that we did. So I'm just trying to enact that now. It's harder now. It's harder now. But that 200 on a weekly, that 200 on a daily, it's gold. It's
Where
easy.
does that come in? So let's just take it. And obviously, we've been extended here on the 200. Money Mitch talks about the moving averages for a while. Me and Joel aren't huge fans, but I can respect, that you're coming into an area where a lot of other traders are looking at it. Where does that come in? Maybe you can show. Can you show your
Yeah.
charts? We never
Can I?
show
Oh,
your
yeah.
screen
I'll,
here,
I'll
Rocky.
show you the. Sure. Let
Yeah.
me show you. I'm looking at the
Yeah,
S&P
let's
right
do
now,
it.
but yeah, let's do it. They're kind of loud and crazy, so I always hesitate for people to look directly at them. You might
Oh,
want
I
to
know
avert
how it
your
is.
eyes
I
until I
know how
tell
it
you
is,
everything
Braggy.
going
I have
on
like a
here.
little, I have a little show button where I take off all the like the levels and stuff because people just sometimes they get confused. But hey, here's the gold for you guys. Let's take a look.
This is the S&P futures, right? So if I'm looking at S&P futures, and by the way, all I have on this chart, I know everything's color coded because I cannot see and I have cataracts in both
Ah,
eyes.
nice. So you got a
Everything's
big.
got to be like Skittles, okay? So if you want
I
to,
That's
oh my
like it.
funny.
I
gosh.
like it.
It
I've got an
suits.
anchored VWAP on here. That's the teal line.
Mm.
The dots are the 200. Notice how the 200 exponential and the anchored VWAP are just hanging out with each other. And then
Yeah.
all I'm looking for is when we get down to a 200 exponential. So here's your S&P. Here's March. I think if you look at SPY, it's going to look very similar. I like looking at the S&P futures for the SPY, but there it is. When I see those white lines or an anchored VWAP to the first trading day of the year, I get to work. And it might only happen a handful of times a year, but if I'm thinking about a year, 2, 3 holding, I don't care, right? I mean, XLK,
Exactly.
I mentioned last October. So anyways, I don't want to get y'all, that was weekly, by the way. So I don't want
Oh,
to get all obnoxious with these screens, but yeah, that's what I'll look for. And doesn't have to be all the noise that I've got there, but that 200 is magical.
Rocky, I want to
200
ask
looks a
you,
long ways down.
It does until we get there, right? It's never going to be easy. It's never going to feel like we want to buy, right? When we sold off in March, it didn't feel good. It didn't feel like this is a great, safe place to do it. And it never feels that way. It's always going to feel like a fire sale. That's what I found.
Rocky, I wanted to ask you, you made an important point. You're talking about investing, for your mother, also investing for the long term, and help us, because, we have our chat, we have our audience and stuff. And we talk to a lot of different people that have a lot of different, time frames and objectives and everything. And what we probably don't get across enough is, like, the younger you are, the more aggressive that you need to be. And I think with what people have seen in the markets, I mean, people of the next generation have gotten smoked a couple times, right? How do we relate better to younger investors out there? And when I mean by younger, a lot could be younger than us, but like the 25, 35, maybe even 40 time frame, as opposed to, people that are, like me, that are, moving on and older in life. How do you
So
get
what,
that?
just let me make sure, what age is moving on? I'm going to be 52 this year. I got the grace to show for it. So how do we
You're
talk to
still
young
young,
people?
The new
Rocky.
20, I heard. The new 20.
Yeah, I know.
ready.
I'll tell you right now.
I'm almost there.
So
Yeah.
the way I look at, I look at it this way. If I were starting off today and I'm 25, 27, 32, whatever it is,
Yeah.
never has the playing field been more level. When I started off in 88, 89, oh my gosh, I couldn't even direct my own order flow. That didn't happen to 95 with Cyber Trader. So now I'm going way back, right? The idea of paying a higher commission so I could look at the bid ask level 2 depth of market, that was unbelievable. And that was only 25 years ago, right? So if you're playing the game today, never before have you had access to people that are seasoned and made all the dumb mistakes before. Never before have you had a more level playing field with indicators, information. I mean, so it's both good and bad, because sometimes it can be a bombardment. But what an exciting time to be a trader now with everything that you have. The other thing is compartmentalize. So I'm going to day trade. What time is it now? 8:24 and 9:30. I'll be day trading the first hour of the day. I've got a 5-minute chart. I'm going to be buying calls, buying puts, trading futures for about an hour. So I'll day trade, but then I'll stop. And then that allows me to open up and make space for some swing trades. What kind of opportunities can I see that will follow through for 1 to 3 days? Johnson & Johnson's been a good one. Freeport McMoran, I've been all over. Where are those smaller windows where there's going to be overnight exposure? Once again, with maybe options dated 2 weeks out. Then at the end of the day, I've done about an hour of day trading, about an hour of swing scanning. You change hats again and say, where are the longer term opportunities? And that doesn't have to take all day, right? Depending on how much time you want to dedicate to each. So I think we just have to accept it's just not one way to do it. We just separate our day out to be able to do all of it. And I don't know if that answers your question, but if anyone's starting trading or investing now, we're not going to, my mom's cost basis on Amazon's under $20. It's ridiculous. Those days aren't there, but I'm not going to lament that. I'm going to say, what do I have now that I want to hold for the next 5 years? And there's some good opportunities.
Give us a stock or two that you'd like to hold for the next 5 years, because we have a lot of investors listening here right now, some younger people that are like, what can we buy here, to possibly make money in the next 5 years? What do you like for the next 5 years?
Think about how the indices are constructed. And I know the most boring thing in the world is for me to talk about the diamonds, the Qs, the SPYs, and maybe the Russell, right? But think about how the indices are constructed. We hear about rebalancing. We hear about, the yearly, what's removed and what's added. They are geared to dump the weak and add the strong.
Truth.
If you look back in a log chart of these indices, they're high concentration weighted, and they're going to be geared towards the upside. So while down moves happen, when you step way back and say, what is the general direction? It's up. and they're I don't mean manipulated in a bad way, but they're massaged, if you will, to
Yeah.
dump the weak and add the strong,
That's a good
right? Whether
point.
that was
Yeah.
the Russell rebalancing, or the NASDAQ was, oh, the NASDAQ is more evenly balanced. No, it's not. It's still heavily weighted and geared towards those same names,
Exactly.
just less so. So why not play the game the way it's made, not lament how it should be or what it could be, and just say, this is what I've got. This is how I'll trade it. So SPY, DIA, QQQ, Russell. I love keeping staples and utilities on dips because you never know when you're going to need those defensives.
Yeah.
Bonds are an easy thing to wait for, right? TLT. So there's so many ways that I can trade these things that are boring as hell, but
Yeah.
keep that
I
longer
think-
time horizon.
I think it's also important what you're mentioning there, right? And not having just all correlation into one area, because that's easily how you get this rotation against you. And then now you have the, the goo eyes looking out and being like, well, now I have nothing in my favor. And I think that's so important for traders to kind of understand that, yes, at times you're going to want to have exposure to different areas so that you can make some gains while the others decline and get that correction.
I mean, housing right now, XHB, ITB, I take a look at that. There's a lot of things that even if the time horizon is 6 months, pull up that daily time frame. Those I haven't heard a lot of discussion about how housing, home builders have been moving, generally speaking. But you take a look at the trends there. It may not make a lot of sense. Oh, rates are so high, and yet there are the uptrends. Pulte, DH, Home Depot. So again, I like boring. I'm the world's most boring trader.
Hey, sometimes I'll tell you what, boring can make some good money, right? And that's what is important here. At the end of the day, I always like to remind traders, we're here to, play the game of the markets, but what we're really here for is to make some money, right? And I think that that's more important over everything. Let's not try to play the hero. Let's sometimes try to play the returns. Thank you, Raggy Hortner, always joining us. Simpler Trading. You guys check it out. And I'm also going to throw in the chat here, the countdowntrader.com. You guys check it out. Definitely give it a check out if you guys haven't done so before. There's some free webinars and definitely some great kind of blog posts that you guys can check out. Always good to have you. And now let's go over to PPI that's coming. Appreciate you here today, Raggy. All right, so PPI is going to be coming in soon here. Joel should be joining us in just a